today we'll talk all about the Bitcoin halving, and a lot of people have wild predictions for this upcoming week now that the halving is only 9 days away. But I really want to say that everything you've heard about the Bitcoin halving and how it impacts the Bitcoin price and the cycle is most likely wrong. So with the halving just a few weeks away, a lot of experts are calling for a supply shock that would send Bitcoin to the moon overnight, or some people are even calling for the other extreme scenario where this Bitcoin cycle is significantly shortened, and now because Bitcoin has rallied too much for some reason, it will suddenly crash. So today, let's take a closer look at what to actually expect from the 2024 Bitcoin halving and how you can prepare for what's to come. Okay, welcome back to the channel. If you're new here, my name is Dennis. I'm a crypto angel investor for the past 5 years, and I have invested in over 100 crypto startups. On this channel, we share views on market trends and investing strategy to build wealth in crypto. So, first, let's get this out of the way and explain what the Bitcoin halving roughly is very quickly. So the Bitcoin halving is all about the supply issuance of Bitcoin. So imagine a world where the gold, all the gold mines around the world cut their production in half overnight. This is essentially what happens every 4 years with the Bitcoin halving event. So the rule of supply and demand suggests that this cut in supply issuance would send the price much higher eventually. However, this isn't an immediate effect. There isn't actually a supply cut right away in the existing supply of Bitcoin. Instead, it's only to do with the new issuance rate of Bitcoin. So why is this Bitcoin halving mechanic even there? So everyone is aware of the supply cap of Bitcoin, which is 21 million. There can only be ever 21 million BTC out there. And not all of that have been issued yet. So far, there's about 19 million out of the 21 in circulation. And every 10 minutes, there is a new Bitcoin block, and miners who help process transactions on the Bitcoin blockchain get a fixed amount of rewards. Right now, that reward is 6.25 Bitcoin. As you can see on this chart, on this number here, 6.25. After the 2024 Bitcoin halving, that number will be again cut in half to 3.125. So you see, a lot of people have been doing these Bitcoin history charts as matched to the halving events, where they say that every time the Bitcoin halving event happens and the supply issuance rate gets cut in half, the price rallies much, much higher, 5 to 12 months after. Now, this is somewhat true, but we'll get into exactly why this data point is a little bit not reliable. So on the other hand, sometimes when the Bitcoin halving happens, there is also a little bit of forced selling because the Bitcoin network is governed and maintained by all its miners, all of these people that run machines. Now, when the reward gets cut in half, there is an argument to say that certain miners will be forced to sell their Bitcoin in order to remain profitable and turn off some of their machines. This is called miner capitulation. And this is the event that a lot of people are saying, look out for a short-term crash. So we'll also get into that and whether this cycle will have a significant miner capitulation risk or not. Okay, so before we get into those, and now that we have gotten Bitcoin halving explained out of the way, let's look at the historical impact of Bitcoin halvings on the price of Bitcoin in the last 3 halvings. So just so you guys are aware, there has only been 3 Bitcoin halvings in history so far. So here is all of the price action of Bitcoin historically, and we're just going to move these guys. So you see the 3 halving events that have happened: November 2012, July 2016, and May 2020. So what exactly happened to Bitcoin's price and reaction and so on and so forth in the last 3 events? So I've broken down things in 5 questions. Number 1, does Bitcoin's price rise or fall in the immediate short term around the halving event, the 2 to 3 weeks around that time. So let's take a look. In the 2012 halving, basically nothing happened. Immediate short term, if we can find it here. Yeah, immediate short term, nothing really happened. You see Bitcoin was just kind of doing its thing. It was slightly rallying, so it continued the slight rally. And then in 2016, we have what I would say is volatility. That's the only observable thing. So there were 2 volatile moves down with a sharp bounce back shortly after. And you see these were not really like long-term trend changes. In fact, the bounce back sent Bitcoin much higher just a couple months after. And then you have the 2020 halving, and bear in mind, this is right after the pandemic crash. So you see, again, just a lot of chop here. Overall, the long-term trend was still just following its own thing. It was consolidating sideways before the move up. And so you got a lot of chop in the months after the Bitcoin halving, right? Sharp drop, sharp bounce, sharp drop, sharp bounce. So this is the immediate short term, which is that there isn't much of a trend specific change that we can observe immediately after the Bitcoin halving event. Usually it only brings volatility. Okay, now the second question is, does Bitcoin's price rise or fall in the, let's say, 3 to 6 months after the halving event? Again, let's observe. So in the 2012 halving, we had a major rally, right? After November 28th, the halving, by April, we have already seen actually a 10x increase in Bitcoin. This is kind of crazy. So that is within 6 months, 10x increase. So yes, 3 to 6 months led to a very significant rally in the 2012 halving. Now in 2016 halving, again, very similar. This basically started a 1 year long major bull market, going from $600 to all the way up to $18,000, the big bull run that everyone remembers. And then we have 2020, where we had a bit longer of consolidation, again, because Bitcoin was the overall entire market was kind of weak because of, you know, what happened in 2020. And we saw another 6 months of essentially sideways in this $10,000 range before actually breaking out. So can we conclude that, is there a very specific time frame that Bitcoin will just start rallying very hard? I wouldn't say so. In 2012, it rallied very quickly, just within 6 months. In 2016, it took a year and a half before that rally reached the top. And then in 2020, 6 months, basically nothing happened. So that's the second question answered, which is that 3 to 6 months, it's not really, there isn't a direct causation that you can say Bitcoin halving happens and then 3 to 6 months, Bitcoin rallies very significantly. That's very hard to say. It is overall bullish. Eventually, the cycle does kick off, but the timing is not that exact. So how is the timing then? Let's get into price-wise what we can observe. So how long did it take after each Bitcoin halving event did Bitcoin make a new all-time high? So we have a second chart here that I have already drawn. So let's go to the 2012 halving. So from the halving event until a new all-time high, it took around 97 days, right? When the new all-time high at $36. And then in the 2016 halving, it took us around 280 to 300 days. Okay, so around 10 months before the all-time high. And then in the 2020 halving, this got even, this wasn't as long. So you see here, 210 days. So 2012, 97 days until the new all-time high, 2016, 300 days, and 2020, 220 days. So again, is that a reliable metric? Not really. The only thing reliable here is that the all-time high will come, right? If Bitcoin didn't make a new low, you can definitely say that. In all three cases, this is true. But how soon is the all-time high likely to come? Well, that is actually not so accurately related to the Bitcoin halving. Sometimes it's shorter, sometimes it's longer. And you'll remember this point because later on we'll see because Bitcoin is already revisiting its previous all-time high, even before the halving in this time around, it makes a very different case. And then the last metric here is how long did the cycle continue until Bitcoin reached the cycle top after the Bitcoin halving event. So this is the date range that we already have here. So in 2012, 367 days after the halving event, Bitcoin topped out and the bull market ended. In the 2016 halving, it took us 528 days of bull run. And then in the 2020 halving, if we count the second peak, technically Bitcoin the crypto market was still in a bull run because there were still a lot of opportunities here in the second half of 2021. So the 2020 halving took us 546 days after the halving event before the cycle topped. So that goes to show you, okay, again, those numbers are not so accurate, right? Sometimes it's short, sometimes it's long. But what you can notice here is that the last two metrics that we have mentioned, the time that the Bitcoin halving relates to the new all-time high and how it relates to the cycle top, that actually is very correlated. So what I mean by that is if the Bitcoin halving comes very shortly, if the Bitcoin all-time high comes very shortly after the Bitcoin halving event or even together, then the cycle is clearly shortened. This is what we can see in the 2012 halving. Whereas on the 2016 and 2020 halvings, because the Bitcoin price took a much longer time to climb up to its all-time high after the halving event, this led to a longer bull run. So the conclusion here is that how long the cycle takes is actually not directly correlated to when the Bitcoin halving happens. It's much more strongly correlated to when Bitcoin makes a new all-time high. If you think about it, this makes a lot of sense because what does Bitcoin halving actually do? It doesn't change anything of the demand side. It doesn't create extra buying demand for Bitcoin. It only changes the supply issuance. And we'll get into some of the metrics also for the Bitcoin supply and how strong of a effect the Bitcoin halving event actually has on the supply. But TLDR is that it's not as significant as the demand side. What actually drives each Bitcoin cycle is usually the demand side. It's how much buying demand there is. And that doesn't get changed when Bitcoin halving happens. So with that thinking, we understand that, okay, if Bitcoin is showing much more strength than usual, like in the 2012 halving, where the rally kicks off very shortly after the halving event, and then similarly to the 2024 halving and the cycle we have right now, where the demand is very clear. Bitcoin is driving up its price even before the Bitcoin halving event, and we are already at all-time high. So this goes to show that the trend this time around is actually much stronger than the 2016 and 2020 cycles because of how Bitcoin's price is already showing a very strong trend even before the halving event. So the demand side is different while the supply side is the same. Okay, so keep that in mind and I'll give you guys a much clearer summary in the end. So TLDR summary of previous data points. Bitcoin halving event is not directly causing each bull run, as we have shown with these data points. And each Bitcoin cycle are indicated and most directly signaled by the strength in Bitcoin's demand, which you can observe with Bitcoin's price, with how quickly Bitcoin makes a new all-time high, not with when the halving event happens. And when it comes to strength in price, technically we are ahead of schedule because the all-time high is happening much quicker in the cycle versus later, which means Bitcoin is stronger in this cycle than previous. And The only reliable assumption in this case is that the cycle is probably going to be shortened that versus previous cycles. So in the 2016 and 2020 halving cycles, we have had 500 to 550 days after the halving event before the cycle topped. This time around, that is going to be shortened most likely. That's a very conservative estimate. What I would say is that we're more likely to see like 240 days to around 1 year of bull run after the halving event. And if we want to be safe, right? If we want to set a time limit for when we want to invest very heavily, this is probably a shortened time this time around. The cycle can definitely last longer for if other things change, but the safest assumption is that, right? We don't want to, play it very safe and say, oh, like once the halving event happens, we can expect 6 months and then the bull run happens. Be more realistic, right? Look at what has been happening in the past 4 months. Coins are rallying like 100% in a day when it's good days. This is clearly a bull run, and the bull run has been going on for at least 4 months now. So we really should not take it for granted and say, because previous halving cycles, there's usually like year and a half of continued bull run after halving, this is likely to happen. I think that's kind of dangerous to assume. The safer assumption here is that the cycle is more likely to end even as early as end of this year. I would say conservative estimate like Q1 next year. So that's what I'm thinking personally. Okay. Now, there is something that's actually reliable when it comes to the Bitcoin halving events and the actual metrics that they change. And that is the Bitcoin mining hash rate. So there are a couple metrics that you can look at leading up to the Bitcoin halving event, which is in 9 days. So the first is the Bitcoin stock to flow ratio. So the stock to flow ratio is translates to the stock, which is how much supply there currently is in the entire world. How much Bitcoin is it out there, and the flow is the rate of issuance of new Bitcoin that is mined, that is being given out as block rewards. Now, because the halving event happens every 4 years and the block reward gets cut in half, the stock to flow ratio actually rises every 4 years. So that's what you can see on this chart. 2012, right, stock to flow ratio rose by pretty much 2x. 2016 rose by 2x. 2020 rose by 2x. And then again, in 2024, having just in 10 days, that's going to rise by 2x. So what this tells us is that the higher the stock to flow ratio, the more scarce an asset is, because there is already a huge supply out there, and the new issuance rate of new supply is actually much smaller percentage versus the current supply. That is what the stock to flow ratio tells us. So does this map very accurately to price? Not necessarily, right? We have seen these stock to flow rainbow charts, right? As you can see here. So yes, as the scarcity line of Bitcoin rises, as you can see in this like estimate chart, estimate line, the price of Bitcoin tends to follow that trajectory roughly. But when it comes to cycle, that is not accurate, right? It's just a rough metric that you can map out like over 4 to 10 years long. So the only thing we can summarize here is that Bitcoin will get more scarce this 4 years cycle from 2024 to 2028 versus the last cycle from 2020 to 2024. So that's the first. The second metric that we can take away is the miner capitulation. So the best metric, the two metrics to watch out for here is number one, it's called the pure multiple. So the pure multiple is a ratio of miner income. So essentially how profitable miners are. And how profitable miners are depend on two things, right? Number one is Bitcoin's price. If each Bitcoin that they mine is very highly valued, they have high profitability. And if the issuance rate of new Bitcoin being mined goes down, their profitability drops because their earnings rate drops. So that's what the Pure multiple is. And then we have the difficulty ribbon compression, or more commonly, we know that as known as hash ribbons, right? So the hash ribbons indicator is this average line here, as you can see, the red line and the yellow line. So what the hash ribbon tells us is it takes two moving averages of hash rates, which is the total rate of Bitcoin miners that exist in the world. So how many miners there are, how many machines there are running to mine Bitcoin. And whenever the hash rate ticks down, the hash ribbon tends to fire, which shows that, okay, mining rate is dropping because people are turning off their miners, because a lot of miners are forced out of the market, whether they are, not profitable enough because Bitcoin price is dropping too much, or usually when Bitcoin halving event happens, a lot of people do need to turn off their miners as well because the rewards are cut in half. So when combining these two metrics, there is a really good estimate for miner capitulation risk that Glassnode has. So what this chart on the right tells us is actually how likely is there to be a sell-off event because of Bitcoin miner risk. So think about it. When miners are under stress, and whether because Bitcoin price is dropping too much or the halving event happens and their reward rate is cut in half, or both happens at the same time, some of the smaller miners are forced out of the market and they might need to sell their Bitcoin in order to recoup cost or in order to keep their machines running. So this is the miner capitulation risk, and this is actually the only risk that makes sense when a Bitcoin halving event happens. When people say like, oh, crash, whatever, from Bitcoin halving, this is the only thing that fundamentally makes sense. Everything else is purely speculation. So this chart on the right here tells us, okay, whenever the Pure multiple and the hash ribbon both come into stress and both are showing that Bitcoin miners are under stress, that is a period when miner capitulation risk is actually high. So what you can see here is that the Pure multiple is in orange and the hash ribbon or the hash rate ticking down is in purple. So whenever both of these are very low, you have a period that is highlighted here of miner capitulation risk that is in light yellow. So you see here in 2012 halving, in early 2012, when Bitcoin price was dropping very low, this did happen. If we want to zoom in here. So in the 2012 bear market, Bitcoin price crashed too much. And yes, this led to forced selling. And then shortly after the Bitcoin halving event in November 2012, you see the Pure multiple dropped a bit, but Bitcoin price was already rallying here. So this actually turned out okay, right? You can see right here. So you see this sharp drop in the Pure multiple. This is because of the halving event. So the reward rate gets cut in half, but Bitcoin price was relatively stable. So miner capitulation risk was not there. And then fast forward to 2016, we have again, early 2015, Bitcoin price was too low. So miners were capitulating, but going into the halving event in, when was this? In July 2016. So you see here, July 2016, right? So if we can find that, July 16, right here. So this is when you see the Pure multiple dropped by essentially 50% here, but Bitcoin price was again holding relatively stable, so no miner capitulation risk. You see, even though the halving event happened, miners were not under nearly as much stress as the bear market when Bitcoin price was just trading much lower. So this is one thing that people really underestimate. The Bitcoin halving event, the supply rate gets cut in half. It's not as significant as a very low price in Bitcoin. As long as Bitcoin price holds relatively well, the supply rate gets cut in half, doesn't actually impact miners as much. So again, we can see in 2020, in the bear market, when Bitcoin's price dropped from, I want to say this is $10,000 to $6,000, you see this is when miners really capitulated. And then the Bitcoin halving event in 2020, there was miner capitulation because Bitcoin price, again, was not rallying much higher yet, right? It was still trading in that $10,000 range because of the pandemic. So when Bitcoin price does not rally leading up to the Bitcoin halving event, and then the halving event happens and the supply issuance gets cut in half, then miners actually have risk. They might capitulate, as we can see in 2020. So that is why in the current halving in 2024, this is not the case, right? The fact that Bitcoin's price is already at all-time high, as you can see in this black chart here. We are at 70K, above 68K all-time high. Now that Bitcoin is already at a very high price, when the halving event happens, yes, the pure multiple will drop, but the hash ribbon is not likely to fire this time because miners will still remain profitable. Because whatever supply reward gets cut in half, it doesn't matter as much to miners because of how much Bitcoin price has already rallied. So they have a very safe buffer here for profitability. That's why I'm really not worried about a crash that will force miners out of the market this time around. Would you compare this cycle and how much Bitcoin price has rallied leading up to the halving event? This is the best case scenario for the Bitcoin halving event to happen. And the chance of miner capitulation risk is much lower than all three cycles before because of how high Bitcoin price is at, relatively speaking. So miner capitulation risk is not really there this cycle around. And that's why I really don't think there will be a short-term crash, fundamentally speaking. Now, can there be like short-term volatility as like driven by speculation? Of course there can be. But the fundamentals with how miners work, the risk is not there this time around. Okay, so those are all the metrics that we can actually observe with the past three cycles and with how the miner activity is and how the hash ribbon and miner profitability are for the past three cycles. Now, here is what I can take away for this halving in 2024. What is actually likely to happen? What to expect? So indeed, this cycle is different from the last three cycles, which is that Bitcoin has hit a new all-time high before the halving, right here at 70K, versus all three previous times the all-time high came after the halving event. But a lot of people are being like weirdly bearish for some reason. And they're saying that this cycle is being thrown off, and because Bitcoin has rallied too much and it has shown too much strength, and that somehow will cause a crash. Think about how weird that take is. When an asset is rallying very strong, it shows strength, it shows buying demand. So why would it be much more likely to crash with another bullish event, which is the Bitcoin halving? That just doesn't make sense to me. So the only evidence here to argue for a crash is that it's for the sake of argument. It's for the sake of like speculation. Bitcoin's price being higher than usual is actually a positive sign of strength. So comparing this cycle around to previous three cycles, my takeaway is that a 30 to 40% dip, like we have seen in the 2016 halving, I think that's very unlikely. And I think much more likely is for us to see a much smaller correction and probably just some more volatile time going into the next 3 to 4 weeks. I would say a 15% drop to retest kind of the 60K range. That is going to be much more likely. And personally, I am not expecting that 60K support to be broken. This is what I'm preparing for going into the halving event. And on the other hand, are we going to have a liquidity crunch that causes Bitcoin to pump to Valhalla right away, like some analysts are calling for? Obviously, this is also no. Looking at the past 3 cycles, there is no clear evidence for this. How Bitcoin cycle behaves is much more directly correlated to the Bitcoin all-time high and the actual uptrend versus the halving event. So when it comes to the supply crunch number, something to keep in mind here is that currently there is 6.25 Bitcoin being mined per block, and there is on average 144 blocks per day being mined. If we can see right here, how many Bitcoins are mined every day? 144 blocks times 6.25. Usually there's around 900 new Bitcoins being mined per day. So that is $63 million worth, right? If you take 900 times 70K, that is $63 million. Once the Bitcoin halving happens, that number will be cut in half to $31 million of new Bitcoin being issued. Now, people are saying that, oh, because this number is cut in half, there's suddenly a supply crunch because like there's too much buying demand from the ETFs. Well, let's compare the two numbers then. The ETF buying demand on a daily basis, right? We have the numbers. We're talking about, let's see right here. So on a daily basis, we're talking about like inflows of 130, 480, 280. So on average, there's about, what is this? Like 200 to 300 million dollars of inflow from all the Bitcoin ETF buying power, as you can see on this chart here. So if there is going to be a supply crunch where on average we're getting 200 to 300 million dollars of inflow, it would have already happened, right? Because there's only $63 million of new Bitcoin being mined per day. Whether that number gets cut in half to 32 million, it wouldn't contribute that much because there is already a much larger inflow versus outflow from mining. So the supply crunch scenario is also not true. Yes, there will be less supply being given out, but the supply crunch has already been happening for 4 months because of the large inflow, not because of how quickly or how slowly the new supply is being issued. So TLDR, supply crunch is not directly related to the Bitcoin halving event. It's more related to the actual demand coming from the ETFs, which are high, and it will continue to be high. So this is actually what you need to monitor. Is the supply inflow continuing to remain high from all the ETFs? And that leads us to last couple data points here. Will the demand side continue, right? So the mainstream ETFs, right, from BlackRock, from Wisdom Tree, Valkyrie, from Fidelity, etc., these guys have been increasing. As you can see with this on-chain holding chart, the total amount on-chain holding is increasing among all ETFs, but the main sellers here is still GBTC or Grayscale. And their GBTC is being sold off with this purple chart. As you can see, that continues to fall. And two main players that have been selling, number one is FTX. So FTX have completely sold off their $1 billion of GBTC holdings back in January. So the FTX risk is no longer there. And on the other hand, for Genesis or DCG Group, just last week, they have also sold off all of their shares of GBTC holdings, all 36 million shares, which is roughly worth $2.2 billion. So you see here, they have used and sold all of their shares. So basically, TLDR is that the Grayscale Bitcoin Trust forced selling is all gone now. What's only left now is what people will choose. Institutions, will they choose GBTC, or will they take their money out and actually put that into BlackRock or Fidelity's trust? So these are not going to be pure outflows out of the Bitcoin market like the forced selling from FTX and Genesis. Instead, they will only be conversions from one trust to the other. Okay, so in summary for all the TradFi stuff is that the TradFi cabal is clearly bought into Bitcoin. When you remember what Larry Fink has been saying for the longest time for Bitcoin, he has been just going on interviews and giving parades, right? The first time around, it was right after they filed their Bitcoin ETF application, and then shortly after the Bitcoin ETF were approved, Larry Fink went on another, roadshow again to praise Bitcoin. And now remember, the Bitcoin halving event is a bullish event. A supply cut, a supply split, whatever you want to call it, really drives retail attention. So I don't think they're going to miss out on this. In fact, I really think they will try to use this event to push a narrative for Bitcoin yet again this month. So what I'm expecting is for Larry Fink, for these TradFi giants, and for mainstream media to pick up again and start another roadshow, potentially to praise the ingenious design of Bitcoin's halving schedules and how its supply is limited, et cetera, et cetera. It's sound money. Look out for fresh interviews from BlackRock, from Larry Fink, coming in the near future. This is what I'm expecting. Okay, so how should we prepare then? Bitcoin price currently is kind of stuck in this 60 to 70K range. So personally, I am not expecting 60K to break. In fact, this current short-term rally that we had in the past month, I would say this is showing quite bullish because we are having higher highs, but relatively speaking, like more flat, higher lows, and relatively speaking, more flat highs. This is actually a slow grind up pattern, which is showing that the demand side is rising, while the supply side or the sell side is being capped at that 72K level, but it's being tested very frequently. And I would say leading up to the halving event, the next time we test this, it's likely to consolidate here and potentially break up. This is something I'm expecting. If I really need to bet on a direction, I think this is much more likely. However, going back to the beginning of the stream, what's for sure going to happen is volatility going into the next 2 to 3 weeks. So I would not actually try to trade Bitcoin in this period. What I'm personally doing is just continue to accumulate in a spot position without leverage in this lower range, right? So anything above that can touch the 60K range and all the way up to 65, I would say this will all be buying range for me. And I think we could get another like wick period like this. So once the Bitcoin halving happens, mass speculation happens, would not be surprised to see like huge whipsaws like this, and then we go up. So I would look to really accumulate Bitcoin spot in this lower support range between 60 and 65K. And that's my plan. And when it comes to altcoins, again, focusing on the strongest altcoin narratives, which we will cover in our next upcoming video for the hottest narratives this month. But historically speaking, once Bitcoin rallies and makes a new all-time high, there's no reason for altcoins to continue to bleed. And that's why I'm also holding all my altcoin positions and not being worried at all. And that's the short-term expectation. And again, long-term expectation is that this cycle is likely to be shortened, right? Keep that in mind. And we will likely not see like 500 days of bull run after the halving event. What's much more likely is 240 to 360 days. So 9 to 12 months of bull market after the halving event, which gives us, let me just map that out here from from 10 days from now, April 20th. So 240 days or so is the shortest time we are expecting. So that is December of this year that the cycle could potentially end, or safe assumption is something like April of next year. So what I would really pay attention to is try to really observe the market in this box range here between December this year and April of next year, and really have your exit strategy ready before then. And don't take the cycle for granted, because it's not likely to be that long again. Okay, and then lastly, for price prediction's sake, right? I think as long as this 60 to 65K range holds, and the Bitcoin cycle, the Bitcoin halving event happens, and the TradFi cabal starts praising Bitcoin again, I think we should see above 80K by May. That's what I'm expecting. If you really want like some short-term price prediction, that's what I'm expecting. Okay, that's basically it. And then couple very quick points to take away in terms of altcoin narratives. Bitcoin layer 2s, Bitcoin ordinals, and Bitcoin ruins. These are some huge sectors to watch this month, because the runes protocol created by the creator of ordinals, Casey Rodemar, is being launched at the halving event. So there is undoubtedly going to be another BRC20 ordinals, Bitcoin DeFi, Bitcoin layer 2 wave coming up later this month. So that's number one. And number two, Ethereum ETF coming next month. So Ethereum narrative will be hot again. And then the third narrative to watch this month is going to be ZK, because most likely ZK Sync is going to be launched this month. So pay attention to that. For all three of these narratives and all the top coins in these narratives, subscribe to the channel, where we'll be making follow-up videos to this very soon in this coming week. Okay, that's it. That's everything I have prepared for today. I don't really have time for Q&As, so let's end it there. Thank you guys so much for joining this stream and this video. Hopefully this is organized and helpful enough for you guys. Again, please refer to this and share this with a friend if you found it helpful. And let's see how this actually plays out. If my short-term prediction is correct for the Bitcoin halving event, and if the cycle will actually be shortened this time around, so we can refer all back to this video in the next 9 to 12 months and see. Okay, that's it. Before I go, two things you should definitely follow me on. Number one is Twitter or X at Virtualbacon0x. This is where I drop all of my day-to-day alpha before I make them into these in-depth videos. And then second of all is our Discord, which you can find with the link in the description, or go to discord.gg/virtualbacon. This is where I post my Bitcoin analysis, altcoin analysis, daily alpha for airdrops, new token launches, LBPs, NFT mints, etc. All coming from me directly. And we are a 35,000 member strong community. If you're looking for somewhere to join, you should definitely take part here. Okay, that's it for today. Thank you guys so much for watching, and I will see you on the next video and next live stream.